And in a situation like this, the sooner you can orient, the faster you can observe, the sooner you can orient on the changing conditions, make a decision and act. If you can act faster than your competitor, you win, right? If you can act faster than your competitor, then you win. And that's what we're talking about here is OODA loop. Observe what's going on in the market, and we're going to take what they thought was going to happen, what is currently happening, and then based on that, we're going to start making decisions and then adjusting and then anticipating what may happen next. One of the key components to being successful at supply chain management is the ability to align our supply chain plan, our supply chain function to support the strategic plan for the organization itself, because we are a supporting function, not a supported function. We don't sit here and make people do our policies and procedures because we want to. Those policies and procedures are put in place to help support the strategic objectives of the organization. So that's a lot of what we're going to be talking about today. In order to facilitate that, we're going to be using AI to help us understand to get things done much faster. I was doing a presentation a little bit earlier about how Apple is adjusting to the current tariffs and what to do. So we grabbed their organization or their 10K report from the internet that talks about their supply chain plan for 2025. We dropped that in, we ran through it to see how it would align, what we needed to do to adjust to all the tariffs that are currently happening and what they have to do. Now, they anticipated it happening, but now we're in the midst of it. What else do they need to do? And we'll talk about that. The reason we used Apple One, it's a publicly available strategic plan that we can see and look at and analyze an actual business, not something that's made up, as well as the need to just show how this stuff can be able to adjust in real time. So, say you did an annual plan 6 months ago, right? In October, you did an annual plan for the following year coming up, and now we're in that year, and things have significantly changed even from last October, right? A lot of things have changed, and now it's like, okay, what do we do? How do we adjust our plans? We can put in that old plan, put in new parameters, and run it through an analysis and come up with action plans that we can use to make sure that our plans are good to go. Does this make sense? We're going to go in and really pull up our Apple 10K. So this is a publicly available report that all publicly traded companies produce. And this gives us information about the company and goes in detail about how to use this report. Let me show you the table of contents, and then you'll kind of know what I'm talking about. Okay, I'm right here. Okay, let's go ahead and make myself small, make that big. So you see, it talks about the business, the risk factor, unresolved staff comments, cybersecurity properties, legal proceedings, mine safety, market registration. Okay, all these different areas. The key areas that you want to look for are management discussion and analysis. Okay, this is going to be a key area, especially when it comes to annual reports. And then things about market risk, financial statements, all of this is in here, and all of this is in a report. How many pages is it? Quite a few. Let me see how many pages we got here. Yeah, we got 120 pages. 120 pages of very, very useful information. All right, so we come in here. We're going to drop it in, and then we're going to start running some prompts at it. Okay, go here and drop it in here. Now let me bring up our first set of prompts. And our first use case here is use case one right here. Okay. So with our first case is we're going to adapt Apple's global supply chain business plan in response to UF tariff expansion and geopolitical risk, right? So this is what's currently going on in the market. This is what's happening, and a lot of organizations are going to feel this. Okay, so we're going to run through this for Apple just to see how we can use AI to quickly adapt and change to the organization as things are happening, right? As things are happening. So with that understanding, we can make adjustments and we can keep working through it. So as we can see here, increased UF tariff on imports from Asia, rising geopolitical tensions, are threatening Apple's cost structure and continuity of supply for critical components. The company must adjust its supply chain business plan to safeguard profitability and continuity, right? So think about that. Apple sees the value of the supply chain in affecting profitability and continuity. We have the data, we have our 10K. We'll pull this from the internet. We'll look at our strategic growth priorities, which is also in our 10K here, and then looking at operation policies and existing risk mitigation language. We don't necessarily have their internal policies, but we can make some guesses. We're going to use ChatGPT because ChatGPT has that reasoning capability that it's well known for. And in this particular case, we want reasoning, strategic reasoning, strategic outlooks, the ability to analyze things, not just look at data and crunch it, but hey, what does this really mean? And then we'll run through our prompts here, and then we'll build out a report that we can use. And what I want you to think about as we do this is that if you're a category manager, this is something you can do for your category, right? If you are a director in managing multiple categories, you can use this exercise, assign it to your category managers, say, go run these prompts and report back to me in 3 hours, not 3 days, not next week, 3 hours, because that's how quickly you can do an analysis and get through this information, right? Does this make sense? Because the faster you do it, the more you can respond, the faster you can respond to it. Because in this, as we call this in the military, the OODA loop: observe, orient, uh, action. An OODA loop. What's my OODA loop mean here? OODA loop. Pull that up here just so you know. Observe, orient, decide, act. That's it. Observe, orient, decide, act. Very simple. Pull it up over here. Observe, orient, decide, act. That's what we do in our OODA loop. Observe, orient, decide, and act. And in a situation like this, the sooner you can orient, the faster you can observe, the sooner you can orient on the changing conditions, make a decision, and act. If you can act faster than your competitor, you win, right? If you can act faster than your competitor, then you win. And that's what we're talking about here is OODA loop. Observe what's going on in the market, and we're going to take what they thought was going to happen, what is currently happening, and then based on that, we're going to start making decisions and then adjusting and then anticipating what may happen next. All right. So we go through that process and we're going to launch through that. Okay. So good. All right. So we got this first use case. Let's bring that up. Let's bring up our first prompts for use case 1. Here are our prompts. Okay. As our prompts, we follow the prompt, refine, deepen, and gist templates. The first prompt always starts with context, role, objective, format. Okay. Much information as you can give it, right? You have a very specific task. You're going to copy this. Business prompt adaptation. Okay. Go through, bring it over here. And there we go. Using the attached 10K reports from Apple. Okay. Adapt. You are a part of Apple's regional sourcing team. Let me make this bigger. Okay. You're part of it. Make this even bigger. Bigger. Okay, there we go. You can see that. Okay. You're part of Apple's regional sourcing leadership team preparing FY25 business plan amid new tariffs and political risk. Act as a global supply strategist with expertise in policy revision and business continuity. Build a revised business plan to mitigate geopolitical risk and tariff exposure. Formatting the structure below. We want strategic goals. We want a SWOT summary. We want risk-adjusted implementation roadmap and revised operating policy recommendations. Giving us examples, focus on supplier diversification, nearshoring, dual source trading, compliance, logistics agility, exclusion, avoid industry agnostic language, and high level sustainability filler. Okay, good to go. Nice little prompt. Watch. Now, I want to note the time. Go. Okay, we got a little clock down here, 3:37. How long does it take to produce an answer? Then we'll talk about the answer, right? We'll produce an answer. It's going through. Good. Supply chain decentralization, reduce over dependence on any single regional, like the China, resilient tariff response operating model, dual path sourcing strategy to absorb tariff shock by enabling seamless transition of production between tariff and non-tariff regions within 60 days. Interesting. Geopolitical risk intelligence compliance frameworks. You have to build out a framework, which you can use AI to build these dashboards and build this real-time intelligence to gather the information you need. Okay, we're still going through. All right, boom, it's done. Start at 337, 338, less than a minute. We have an answer. We have a good answer that we can work with. Now, imagine if you had to build your team, bring them into a room, give them these assignments, go find this information, come back. Everyone reports their information. Now you got to assemble that information into some kind of product that you can use for planning, and then you have to start your planning process. Just me saying that took more than a minute, right? But then actually go do that, breaks, lunch, everything else that goes on with that, just end of day, time limits, anything else. It takes a lot of time. Here we got a lot of this done within a minute. Within 1 minute, you got this through. We got some strategic goals. We have a SWOT analysis. Talks about our strengths, our weaknesses, opportunities, and threats. Okay. Risk adjusted implementation roadmap based on the 10K report that we had earlier, right? Where it gave us that information. Now we can adjust that roadmap. So what they were thinking for 2025, they're now adjusting this with a timeline. Okay. Finalize contracts between alternative suppliers in Vietnam and Mexico. Reduce over reliance on China. All right. This is what they're doing in Q1. We're in Q2 right now. Establish regional support scenario planning task force. It's going to take some people, or what? You can build a AI platform to give you this information, right? Now, something like this, to gather the information isn't necessarily internally sensitive, security sensitive, because it's publicly available information, right? Okay. Implement digital twin modeling across top tier 1 suppliers. What does that mean? That means you're building out a twin to simulate what they're doing, right? And you can then run simulations, predict upstream and downstream agility. So you would build out your top tier suppliers. What are their conditions? What are their operating procedures? What's going to affect them? So if there's a natural disaster, say a typhoon that's going to hit Vietnam, then it's like, okay, where are we going to shift? We're going to go from Vietnam to India, or India to Mexico. We're going to move that manufacturing somewhere else, shifting it across. And then revised operating policy recommendations. Okay. New policies, diversification mandate, nearshoring strategy, dual sourcing policy for final assembly, trade compliance automation. We did a compliance bot. Remember that? We did that. We built that out so we can do that. And they're saying within 48 hours. And what we did it within the same day, within the same hour, we could find out information. And logistics agility protocol, which allows the logistics arm to be more flexible to the needs of the organization, right? All that occurred within a minute. Let's go ahead and look at our next prompt. Now we want to refine. So we start with an initial prompt, and then we're going to refine to gather information. So imagine you're having a strategic discussion with your team. This will be the next question. Okay, what was the biggest driver of changing the plan, tariffs or supplier concentration? And when I did this earlier, it was a very interesting thing. And what I thought was interesting is supplier concentration is the issue, not necessarily tariffs. Tariff is the antagonist, but the actual issue is that we put too many suppliers in one place. And this is a lesson learned for everybody, right? It's not just Apple, but anyone who has an over reliance on suppliers in a specific region can be easily affected by circumstances from that region, right? Whether it be a natural disaster, a political issue, a regulation issue. The more you rely on single suppliers, the more at risk you are when something happens there. So that's definitely something to think about here. As you can see, it gave us the reference for that. Tariff as a catalyst, not a cause. Okay. Here you go. Restrictions on international trade, such as tariffs, can require the company to take various actions, including changing suppliers, restructuring business relationships. Changing company's business and supply chain can be expensive and time-consuming and disruptive. Another reason we do strategic planning, right? Again, I don't know Apple internally, but what I could tell you is that everyone knew something was going to happen when a new administration was put in place. So you could have ran dual planning scenarios, one based on either administration that came in, right? And then whenever the election was final, then you can pull off that plan and run through it. So you can anticipate that need. Okay. So analytical framing, tariffs are the trigger, supplier concentration is the underlying risk. All right. One vision, we don't need that right now. We're going to continue to walk through this process. Okay. Expand the SWOT to include new regulatory threats in China and EU. Okay. Again, this will be something you'd be asking your team in the middle of a meeting, and they have to find the information and bring it back. Okay. Going through, and it's looking at our SWOT, giving us new information based on the SWOT information. Okay. We're now adjusting. We had an annual plan. We started executing that plan. Circumstances have changed. And now we are going in and adjusting that. Why is that important for a procurement department or a sourcing supply chain function? Again, we want to anticipate things. If we can anticipate what's going to happen, then we can put things in place before they actually happen. Okay. This was China's evolving tech nationalism pose a dual threat, supply side disruption, and a regulatory compliance cost. Okay, what is the evolving tech nation? Is what they're saying here is that China's saying, hey, we are going to be the tech thing. They're being, selfish, right? If that's one thing you want to look at. Then the EU is implementing complexities as well. Let's go back over here. Keep running through this. Refine the roadmap to prioritize actions that, again, protect the gross margin. Okay, come over here. Run through it. Okay. Refine the roadmap to prioritize actions that protect gross margin. Now we're like, how do we protect our margin? And it's actually going to give us some action items that we can do. Now, always remember, it's giving us an answer. Is it the correct answer? You have to know what correct is. You always have to know what correct is. That's another reason you go through the CPSM certification training included with our annual plans where everything's included when you go through these AI classes. You also get these types of things. And then we do case studies to apply those things, right? Okay. High impact levers for margin protection, tariff aware, SKU realignment, freight shift strategy, localized inventory buffering, right? Using free trade zones. These are actual executable strategies. Dual currency contracts, hedging. FX means foreign currency exchange. So here, and I did a study on this where Dell Computers was very good at doing hedging to the point it became a profit center for their organization. And what that does, in other words, there's a model out there to do this. You don't have to reinvent the wheel. You can look at this model, and what it boils down to is that when you do contracts, you're hedging currencies at the same time you're doing contracts so that you can pay based on the best exchange rate. There's a whole strategy behind it that you work with. And the idea is that as the currency fluctuates up and down, you make money and lose money as the currency fluctuates. And you know that, and you hedge against those changes by either shorting the market or going long in the market, one or the other. That's a whole other conversation for another day. But that's commodities trading that you want to look at there. Okay. So go through there, and then we go through here. We could go through a little bit more. We're going to stay on our track here. I like this prompt series. Very good at building things out. What part of the plan is most sensitive to political instability? Because politics is driving a lot of this. This is very important, right? Very, very important. Okay. The most politically sensitive, again, look at the clock. You start the answer, and within a minute, we have an answer that quickly, right? Of course, China's strategic control over Apple's value chain is there. Okay. 90% of Apple's flagship hardware still assembled in China. All right. And that's where I think some people are making a mistake that the world likes Apple, but can it survive without Apple? Absolutely. There's alternatives, right? There are alternatives to this. So export controls of not only parts, but rare earths, factory inspections, okay, and national security audits impacting shipment clearance and custom cycles, tit for tat retaliation risk, supplier loyalty, and workforce risk, right? Imagine the workforce in China. The workforce doing the work starts to say, hey, we're not playing anymore, right? Still, that's an issue, right? People matter at the end of the day. Risk mitigating moves already in plan, all right? Dual sourcing, regional redundancy, buffering, and logistics flexibility, and supplier diversification mandates. All these are already in play. Okay. Filter out low impact changes. What 3 shifts would matter most to Q1 F25? We are going to look at Q2 because that's who we're in right now. Okay. Q2. Okay. So now this is giving us very specific focused information. Where do we focus our attention? It's going to give us an answer, not necessarily mean it's going to be correct because we have to know what correct is. So we're going to look at these answers and evaluate them based on our needs, right? Okay. This will be number 1, dual source key high margin components. Always making sure you have 2 suppliers. Why it matters. Impact zone. All right. Cost to serve modeling for regional sourcing. Deploy cost to serve analysis across alternative regions for high volume SKUs. That's that business decision. Do we build out a second footprint? App Store and platform compliance readiness with EU, right? The EU is also enacting regulations in response to different tariffs. It's all happening right now. Why it matters. We go through this process. Low impact moves, things you don't need to worry about right now. So if you had to choose, where do I focus my time, my effort, my team, my money? You now have 3 ideas to work with. How do you balance that? You go back, you've been doing this a while, you know whether or not this makes sense. You know whether or not this makes sense. Now we're basing it based on Apple's information, so we'll work with it. Include quick wins and policy changes that procurement can enact immediately. Go in there. What can we do right now? What actions can we take right now to make sure that we have an impact right now? Right. Tariff aware contract clauses. Go in, look at all our contracts, see how they are affected by tariffs and what we need to do about that. Supplier country of origin transparency requirements. Make sure that we are onboarding suppliers with the policies that can handle that. Memorandum of qualifications and lead time adjustments for agile reallocation. Reduce minimum order quantities and build in flex volume clauses with tier 1 and tier 2 suppliers. Again, these are all things that we can do right now. Rapid pay incentive for non-China suppliers. There we go. Instead of doing net 30, net 60, net 120, it's net 15. Get them paid quickly. They get happy. They continue to serve. Cross-functional compliance checkpoint for every major PO. We're going to look at other areas, make sure everything's good to go. Optional enhancer, sourcing playbook, micro updates, bi-weekly 1-page update to buyers with these things, right? Okay, so these are good. This is all good information that we can use to help make things happen, things that you can take advantage of right now. And that's just in our second layer, right? Again, we started at 3:30, 20 minutes later. Now we've got action items that we can take advantage of and take action with. And then we want to go a little bit deeper. All right. Well, contingency plan is in place if access to Taiwanese fabs is disrupted. Okay. So again, we're getting more information. We're building this out. This is all going to come together at the end where we bring out an executive report that drives that we can use to report higher and start to build in more plans to do things. Okay. So what happens if Taiwan is invaded by China and things are shut down? What are we going to do? Anticipation today enables you to be successful tomorrow. And that's what we're doing here. We're anticipating what's going to happen. Taiwanese manufacture 90% of custom chips. These chips are fabricated on advanced nodes. Blockade, invasion, or even severe sanctions could cut off access for 6 to 12 months, impacting all flagship product lines. Dun, dun, dun. What do we do? Apple's contingency framework. Diversify outside of Taiwan. Well, what is this? This is our basically chips manufacturers. We have a fabrication plant in Arizona. It's been built, beginning production in late 25, 26, which we're in 25, 26. Okay. If we needed to ramp that up, they could start to build buffer inventory, storage, 4 to 6 weeks. Makes sense. Design for portability initiatives. Where can we use chips between different products? Where if we get cut off from this, then we can use that chips that we currently in our inventory, our older chips. May not be ideal, but they would work. They would work. Okay. Strategic engagement for alternative foundries. Where else can we go to build out our chips? risk mitigation recommendations, right? Finalize long-term capacity reservations in this, right? So a lot of people are going to be wanting to get chips from this new production plant in Arizona. Are we engaging with them? Have we started talking to them, locking in contracts for the long term? What are we doing? Okay. Dual sourcing older chipsets, buffering inventory, and design transfer readiness kits for key chips. Right. All that's working through. Okay, so this is actionable information. Okay, this makes sense, right? All in 2 minutes. We got ourselves a good plan here. Includes supplier segmentation, low risk versus high risk exposure. Okay, this is going to give us a framework to work with for our suppliers. Okay, then we can take this framework and apply it to our supplier database to segment them to our high risk suppliers and our low risk suppliers. Now, when I did this earlier, this is where the platform started messing up on me. Okay, cool. It works. Okay, so what we have here, I'm going to make this a little bit smaller here. What this is doing is giving us a framework, right? Risk exposure matrix, low risk suppliers, moderate risk suppliers, high risk suppliers. Key insights, where we're going to go through moderate risk suppliers, low risk suppliers. Suggested actions, okay? For our high risk items, launch rapid second source validation for TSMC dependent chipsets. Where do we have other chips that we can find? Now, we were talking about this years ago, the whole possibility that chips can be cut off. What are we going to do? So if you're just doing it now, you're a little late. Secure long-term contracts with Japan and US-based component suppliers. All right. Require COO exposure reporting and continuity plans from all high risk, medium risk vendors, right? That means they need to do this type of planning and analysis as well, right? Some of them are not capable. And if you find that they're not capable, definitely reach out to me. I'll be happy to help them build out this capability so they can provide the information you need to be successful. All right. Continue to go through this. This is fun. Oops. Let's go back. This one. There, cool. What would the business plan look like if tariff hikes doubled? Which happened. It happened this week. This week. All right. Which did happen this week. All right. It's going to verify it. We're searching the web right now. Holy cow. This happened. All right. Now, 125% tariff pinpoints as of today. Revise strategic initiatives. Holy cow. Accelerate diversification to manufacturing. Implement tariff mitigation strategies. Adjust pricing strategies. Enhance operational efficiencies. Engage policy advocacy. Financial impact projections. Analysts project that the increased tariffs could add approximately $250 to $675 to the retail price of iPhones, depending upon the model manufacturing origin. For instance, the iPhone 16, currently retailing for $1,199, could be around $1,874, right? What's our roadmap? What do we do? How soon do we do it? When do we do it? What's the initiative, the timeline, and the expected outcome? And this all gives you specific information that you can use right now. Where are assumptions being made about supplier flexibility? So this is going to validate. This is a great question. I saw this question. I thought it was a really good question, because now it's like, where are you coming up with these assumptions based? What are you making your plan based on, right? Tell me what your assumption is so I can validate those. I can make sure they make sense or not, right? And if they don't make sense, I can give you better information so that we can get better planning done. Better planning done. Okay. Speed of dual sourcing assumption. Apple can shift to India or Vietnam in less than 3 months. Okay. That's a very big assumption. Right? It tells you why. Willingness to share tariff costs. Suppliers will absorb a share of the 125% tariff burden in the cost sharing agreements. Maybe, maybe not. Okay. Geographical production flexibilities. Moving partners in India and Mexico go quickly or faster, right? Supply chain portability at the sub-tier level, your tier 2 and tier 3 suppliers. How can they align and pivot with their tier 1 suppliers? Strategic takeaway, the FY business plan makes aggressive assumptions about supplier agility that may not hold under compounded pressure from tariffs, compliance, and operational constraints. These gaps should be addressed with realistic ramp timelines, deeper sub-tier mapping, and financial stress tests on key suppliers. This one right here is the one that's probably going to catch a lot of people off guard. Why? How often do you ask your suppliers to give you information about their suppliers? A lot of times they won't tell you because they don't want you to go around them. So in addition to doing deeper sub-tier mapping where you're going to tier 2, tier 3, tier 4 suppliers, you're going to have to build in your agreements, the trust, non-disclosure agreements, so that you don't destroy those relationships, right? So you want to make sure you're going to have to build that trust. If you haven't built that trust, you're going to have to go back into that trust and rebuild it here. Next is compare current and proposed supplier mixes across APAC, US, and India. Okay, we don't know who their suppliers are in these places, so we're just going to, tell it, say, okay. Here, look at the current market for Apple suppliers to compare current and proposed supplier mixes and criteria. Okay. What I'm doing, basically saying, hey, system, go out and find the suppliers, bring that information back into this simulation analysis. That's what we want it to do. Okay. So now it's going out and searching the web. It may have done that on its own, but I wanted to make sure it went out and found the suppliers, right? So that we could look at how we're going to adjust things. And notice here, it's giving us, again, the information we need here. Yeah, this is from last year. Okay. Going through more data. Very cool. So what did it tell us? Current supplier mix is here: China, Taiwan, Vietnam. Proposed adjustments: Vietnam, Malaysia. Diversify. United States, current supplier mix: limited manufacturing presence. Proposed adjustments: onshoring production, bringing the inshoring production back, investing in facilities. India, current supplier mix: host suppliers such as Foxconn, Wistron, and Pentagon, primarily involved in assembling older iPhone models. Proposed adjustments: scaling operations, supplier development. Again, this is where you're going to work with your suppliers to enable them to do more for you. Strategic implications, risk mitigation, cost management, and supply chain resilience. All positive things. Good to go. Okay, our last one, then we're going to put it all together and have some fun. How should Apple handle supplier NDAs and compliance documentations and regulations shift? It's the legal side, right? This is why we do this prompting process. We start with an overall prompt, we refine it, then we go even deeper, right? The initial prompt was good, but it wasn't good enough. It didn't give us the rich information that we have here that we're going to be able to use to create an executive report at the end. All right. And there it goes. Updated NDA and compliance documentation strategy for Apple FY25. Modular NDAs and jurisdictional carve-outs. Okay. Dynamic compliance documentation portals. More good stuff. Regulatory exposure matrix. All supplier contracts. This is going to take time. Can you use AI to do this faster? Absolutely. Third-party audit rights and cross-border access flexibility, and classify supplier risk tiers for legal scrutiny. Okay. Here are your strategic benefits. And we have an error. So I go through, it's going to do it all again. And this happens when you work with this. Sometimes it'll get locked up, and work through it. Depending upon the time of day, how much information it's working with, all these different pieces here. It's going through. Yeah. Okay. Now it's putting it together a little bit better. Tiered NDA framework based on risk. Mandate real-time regulatory compliance reporting. Continue on. All right, cool. Well, let's continue. I'm going to tee up the last prompt for this particular section, and then we're going to have some fun. All right, we may have time for one of the other prompts here. Okay, so this last prompt is the gist. We'll put it all together. What's the gist of this? Provide a condensed executive briefing, 3 strategic business plan adjustments, SWOT summary, 2 new updated operating policies, and top 3 actions for FY25 mitigation. Now, you're like, Randy, why don't you just give them all that information? Because executives don't need that information. Plus, you don't have time to do everything, right? You have to prioritize your effort because the situation is changing so dynamically. You start taking action today, by this time next week, could be a whole different situation. And you've been way down the road if you have too many things that you're focused on, right? Okay. We'll wrap that up. All right, let's go ahead and let's get it all together. Get our executive summary. Work through it. Okay, good. Right. So again, this whole process, category manager would run this whole process, take this report that we're building right now, put it together, clean it up, make sure it makes sense, and then they would submit that to the director. The director would get multiple category reports from multiple people, right? And then they would consolidate that all together. Now, what that director can do with all those reports, you can take all the different reports, put them into this process, and consolidate that to where your top 3 strategic plans are, see what's common, right, across all the plans. Instead of having to read all the plans, you tell the AI to find the commonality, look for the patterns, identify the common elements in the SWOT analysis, update your operating policies. Maybe all of them have the same recommendation. Maybe one of them has something different. So you want to see what that is, right? Top risk mitigation actions, immediate SKU reallocation, inventory buffering, and supplier COO traceability program. All right, now we take this information, right? Okay, I'm going to do, so before I do that, say based on information from the last 30 days when the U.S. implemented significant changes to the tariffs policies, what would change in your action recommendations? Okay. And the reason I'm doing this, before I build out detailed action plans that I'm actually going to use to assign tasks, I want to make sure it's still up to date, right? Okay. This is where we are today and all that good stuff. Revise strategic recommendations, accelerate manufacturing diversification, implement tariff mitigation strategies, and adjust pricing strategies. Okay. Enhance operational efficiencies and engage policy advocacy. Okay. Continues to go through financial impact projections, still the same. Implementation roadmap, very similar right there. Now look at these changes, right? Revise strategic recommendations. SKU reallocation, inventory buffering, supplier CO traceability program shifted to accelerate manufacturing diversification, implement tariff mitigation strategies, adjusting price strategies, enhance operational efficiencies, and engage policy advocacy. Just 30 days. Significant change in focus of what they wanted you to do, right? So go through that process, say, okay, based on this, on the new action plans, the new strategic, what do we call those things up here? The new strategic recommendations, the revised strategic recommendations. Build out action plans to execute these recommendations that include the task, the role responsible for the task, and the timeline to execute the task for each of the 5 strategic recommendations. The reason I'm doing this, the reason I did this is now I'm building out action plans that I can use to assign tasks to people to execute this stuff, to get this all happening right now. I don't need to wait. I don't have to sit here and go through a planning process. I'm saying, give me action plans. Now, I have to know this is correct, right? I have to know whether or not this makes sense. And if it makes sense, we go through it. If it doesn't make sense, I make adjustments, right? And remember, I was looking at role responsibles. Why did I say role responsibility? One, for 2 reasons. One, I can identify a person in that role or with that skill set. Sometimes people have multiple skill sets, serving multiple roles. I've identified who that is. At the same time, now I can build out AI tools to execute these roles, right? I know we're in the beginning of AI, but just imagine if you were a director and you built out a team of AI bots for each one of these roles, then they can start to execute and build out communication plans, emails, tasks, project plans, orders, RFPs, questions, RFIs. They could build all that stuff out, create those emails, create those documents for you, line them up in a queue. You can review and send, review and send, review and send, versus a person having to go back and do the same thing. Takes a lot longer, more mistakes, all these different things. Don't forget, you have to train the bots to do these things. However, you now have a bot that can actually execute on this stuff, right? Now this here, let's do a Gantt chart timeline. All right, yes, Control C. And here now you've got some project management tools that you can actually use, right? Makes a lot of sense. Right here, Control V. Yes, give me a graphical of this project. Okay. Now this is just eye candy, right? This is eye candy you can give to an executive, because just because you have a beautiful Gantt chart doesn't mean anybody's going to do the task on the Gantt chart, right? So go through that. Okay. So while that's building up here, let's go to our second use case. Use case number 2. Okay. So use case number 2 is reframing the supply management objectives to align with Apple's uh, risk and growth strategy. Apple's updated 10K outlines significant exposure to international trade disruptions, components shortages, regulatory uncertainty. Supply manager must align its objectives with enterprise level risk mitigation. So now what we're doing at the next level, okay, everything we just did was at the higher corporate level. This is going to break it down into the supply chain function level, right? So now you're going to start to walk through this and say, okay, now I understand the corporate plan, what's going on. Now I'm going to adjust this for my particular department. And we're going to go through that process. Now I'm going to take a look at these prompts for use case 2. Okay, here we go. Apple's executive team has flagged global sourcing risk, trade instability, and sustainability as FY enterprise priorities, which we just did. We did all of that, right? Act as a supply chain strategist focused on aligning department objectives with corporate strategy. Translate enterprise level risk factors in supply chain objectives and owner assignments. Format, corporate priority, supply management objective, metric KPI, responsible owner function, examples, exclusions. All right. So that would be the initial process. Come in here. So what we're doing, again, we're taking this. We did the executive level, right? Now we're taking that and rolling it into here. So what's the benefit of following this process? So what we've done, based on our own analysis, we flushed out a simulation of what the executives are doing in regards in response to this based on just a 10K report. I'm sure they have a lot more information. They can work on that information. But the exercise of taking a report, you're not in the meeting. You get a report from the meeting. So from that meeting report, you now build out a better understanding of what the corporate strategy is. With that information, you're going to create a departmental level strategy. And that's what we're going to do next. Okay, so let's go ahead and cue that up a little bit here. Here's our Gantt timeline. Looks pretty. Okay. And you kind of got, and what this is, if you're familiar with project management, these are just all the tasks that have to happen in specific order before another task can happen. In other words, you can't do this, finalized contract. Can't see that, can you? Okay, so example, you can't do finalized contract tooling migration until you identify the top SKUs to actually contract, right? So that's what a Gantt chart does. It kind of lays it out to help you know what to do first before that. And that's all in project management and helps you do that. All right, so go in here. Now we're going to build out that next step. So now we are the role of a supply chain director. And it's going to go through, look at everything we've just done. Which is what we did. Now we're aligning the goals from the corporate priorities Okay. And we're bringing it down to supply management objectives. These things were identified, right, at the corporate level. Now we're bringing it down into a lower level, something we can actually execute. Who's owner, who's responsible for these things, corporate priority. Okay. And then we go through our refined process. Okay. And then we go through these one at a time here. Okay. Well, we're going to take it because we're kind of in a time crunch here. Which corporate goal was hardest to translate into supply objectives and why? Okay. Go through that. And the reason we want to know, because maybe we didn't get enough information. Maybe we need more information so we can go ask for more information. Okay. Unlike tariff risk and dual sourcing, which have clear contractual bound relationships, carbon emissions are distributed across multiple tiers, including tier 2 and tier 3 suppliers that Apple doesn't directly manage. Okay, makes sense. Not really a priority at the time. Okay, let's step back. Let's go back and look at the priorities here. All right, global risk, trade instability, number 2, number 3, flexibility, margin pressure, that was good. Contract agility, regulatory compliance. All of those make sense. They all make sense. Number 3, that this one, although important to some people, what does that have to do with the price of tea in China? No kidding. With the tariffs and everything that's happening out there. It's important, but hey, is this good? If I can't, so what, right? So what if I can't make this happen, right? If I can't deliver my products, it doesn't matter. Which now we know. It's like, okay, that's not a high priority. So I can bring that up and take it to a higher level, say, I saw this was a priority. Is it really? I would like to change the priority on that item. Okay, add performance metrics that are used in Apple's 10K to track supply performance. Over here. Right. Now we're aligning supply chain goal alignment, product availability and operational efficiency, what KPIs we're going to be looking at. If we're not already tracking these, we're going to make sure we're tracking them. Average landed cost per unit because of tariffs and freight duties. All this stuff is going to add up. Cost of goods sold as a percent of net sales. Contract agility compliance. Okay, percent of strategic suppliers passing annual compliance audits. One, are you doing the audits? Right, because that takes time and effort and money. And then percent of suppliers with NDA contract refresh aligned with regulatory triggers. So you have to set up a whole matrix of suppliers, and that's why 500 suppliers are much more manageable than 5,000 suppliers, right? If you had to, right, you could then pull in all your data, process and say, okay, what are my top priority on the suppliers I need to work on this stuff with, right? Because you don't have a lot of time. You still got to do it, and this stuff is happening right now. You got to work through it. Carbon thing, we're going to pass that up. Okay, we'll continue to go through this. Okay, filter to only tier 1 tier supplier risks. Eliminate HR and logistics goals. I didn't see any on there, so we may not have to even worry about that. Okay. And these are models. These make sense. You may or may not think they apply. And as you execute these, you'll realize what's good and what's not good and how to work through them. Okay. Okay, cool. Here. It's working. Tier 1, Tier 2 supply risk alignment map, dual sourcing dependency risk, tariff export compliance risk. I don't know why that went big all of a sudden. Cost escalation and foreign exchange volatility, supplier audit and transparency, capacity, agility, and continuity planning. Okay, these are all very important. So what you would do with this information is you would then go into your suppliers. Now your buyers and your vendor managers, this is going to be tasks for these guys, right? They're the ones that are going to do this stuff. And because look at it, you got dual sourcing, dependency risk management, risk manager, compliancy risk. So you got to have a legal person on your team. Now, because of foreign exchange, you need to have some kind of finance person on your team. Supplier audits and risk transparency. Again, risk manager, an audit capability. Okay. Capacity agility and continuity plan. Capacity agility, here you're going to want a manufacturing engineer, industrial engineer that can understand that type of stuff, at least has a background in it. In continuity planning, you're going to want some kind of project manager or planner that can do that kind of stuff. And then our next is, how do these objectives support Apple's risk posture under SEC disclosures? It's like, why do I need to know that? Because you're a publicly traded company. That's why. Okay, condense the map to 5 key supply objectives most critical to FY25. Okay, here's our SEC risk disclosures, dual sourcing dependency risk. Okay, tariff export compliance. Okay, this is just a compliance play, right? So we got to make sure that we are in compliance and that we're not complying, we're not creating problems by having to do all these types of things. And so we would just balance that. Condense the map to 5 key supply objectives most critical to FY25. So now we're taking all this information. Okay, let's focus on these 5 things, which makes it manageable. You say I got to focus on these 25 things, nothing's going to get done. But now I'm focused on 5 things, and that gives me good focus on where to go with this. Great. All right. And last, add stakeholder alignment indicators, internal buy-in, cross-functional ownership. Very important, because we need resources, time, and help. These are the guys we're going to go after. All right. Who do we need to talk to? Look at this. Gives us an owner, builds out a communication plan for us. Right. All these things. Perfect. This is good. This is great. So now you have this is what I have to focus on. This is who I need to talk to about it. These are the objectives, and we run through it. Very good. We're here. And we go even deeper, right? We deepen them more. Okay, this is going to be the what if scenario, right? We're going to run through the what if scenario. What if only 2 of these objectives could be resourced? Which would you prioritize? Now, it's going to give us an answer, right? But who knows best? I do. I may not agree with it, but it gives me a sounding board. Okay. What are we going to focus on? Dual sourcing, high impact components. Now, these should be the first 2 priorities on the list above. Let's see. Let's validate and check that. Yep, they sure are. Okay, there are the top 2 priorities, and that's where we focus. So if I had limited time, limited people, limited budget, I'm going to focus on these other ones. I'm going to focus on the first 2, and then I'll get down to everything else later, if and when I have time. Right? Show how one supply objective supports multiple corporate initiatives. There we go. This is good. Where do I focus my time? Okay. Dual sourcing like that. There's only one thing I have time to do. That's the one thing I'm going to do. Right? This tells us why. And here's all the corporate initiatives that were to go in. So if you needed additional money, additional people, additional systems to do this one, there you go. You can ask for it right here. Okay. Evaluate the trade-offs between cost risk and supplier diversification. All right. Now we're doing some more risk. And this is another reason why we use ChatGPT to do this, because it has this reasoning capability. All right. Okay. Here's our dimension, cost impact, risk impact, strategic notes, and it goes through that whole process. Okay. This is a good analysis. I mean, you could not get this level of planning and analysis done in a few days, right? So getting this done here makes a big, big difference, right? So within an hour, we haven't even hit an hour yet, you're building out a solid strategic plan in response to what's currently going on. Okay, how should these goals be adapted if macro risk shift to Latin America? Good point. I didn't think about that. Let's say Mexico decides to have a problem because of the cartels and what's going on there. Okay, Mexico and Brazil. That's giving us another scenario, something else. Still, these 2 objectives are supported. So this is really kind of building this out. So what are my teams here? This is good. It's kind of building a project for us, isn't it? Which objectives can be driven with minimum budget reallocation? Another good point. Good to go. In other words, I don't get any more money. I don't get any more people. What can I do? Because you already have the process in place. You're using other people. Okay. Strategic value, walking through it, supplier audit, risk transparency, cost, resilience modeling. Okay. So you can do that. Why it's low cost? Can use existing suppliers, build on analytics and finance tools already in place, update documentation rather than new systems. Higher cost counterparts for comparison. Dual source implementation requires tooling, qualification, takes more time. Emergency capacity switchovers involves physical validation, logistics readiness, and CAPEX, and alternative geographies. Sustainability sourcing targets demands carbon audit infrastructure. So these are a lot more expensive, although a higher impact. So now, where do I spend my time? Where do I spend my money? Walk through that process. All right, we got one more, and then we'll probably wrap it up for the day. Consider how executive incentives tie into the supply management objectives. Okay. Why is that important? The reason that's important is because this is what they are going to support. If they see that these supply management objectives directly affect their ability to get paid, they're more likely to support it than otherwise, right? Okay. Supports these objectives. Good point. Tied to general counsel, CFO incentives, directly impacts CFO, key for chief compliance officers, right? And this becomes important when you're trying to align these objectives with higher executives. If you can support what they need, they're more likely to support you with what you need to get the job done, right? So you walk through that whole process. Very good. All right, now the last one, we're going to get the gist of it, put it all together. I like to say that. Provide the gist. So that's going to put it all together, something that we can build out and we can actually execute on right now. Okay, we want our top 5 objectives. Here they are. Alignments with Apple's enterprise risk strategy. Here's where it aligns. Cross-functional dependencies and summaries. All right. This is where who else does this work with? And we build it all out. Okay. Very good. Okay. So that's, again, so we went from strategic corporate view. Now we drilled it down into the supply management view, supply manager's, director's point of view, and what he has to do. And the next step would be to go in and build budgets to support this. Okay, so that use case would be go in, all right, reallocate supply chain budget amid tariff-driven cost pressures and regulatory shifts. We don't really have that information, but what I'll tell you is inside the training area will be the prompts that you can use to get this information and run this on your own. Okay. So in that, you're going to have the budget line items. You're going to be able to run through this at a much more detailed rate than I can here. And we would just guess anyway. And I don't want to guess. I just want to let you know that the prompts will be available to you as part of the package we put together for this particular training. And that way you can run it with your own budget line items. And as you guys said, as you start to go through this and as it makes sense, let us know how it works for you. And it works. Okay. So start to think of some questions. I want to kind of wrap up where we are today with everything that we've done. It's been a good presentation. Okay. We went through all the different parts here this afternoon, talked about strategic planning, the different objectives, the different parts of strategic planning, how they align with the different parts of the organization, how it works together. And then we put it together through a use case using Apple's 10K report, which just gives us a relevant case study that people can see right now, right? And we run through those prompts and we use them to help us be strategic. And we did this all within an hour, right? Once we started the use case, and it's not quite, we started at 3:30, right around 3:30, and now it's almost 4:30. So within an hour, we did a strategic analysis of the strategic corporate plan. We did a supply chain analysis that aligns us with the corporate planning. We put it all together. Only the next step would be how do we make sure we're properly resourced? And we would run through that as well in the next process. So by putting it all together, it helps you be successful. Does this make sense? Okay. Any questions about anything that we've talked about today? Anything at all? Okay, I think it's definitely, again, the benefit. The more we do these use cases, the more we apply AI again and again. What I'm seeing, the major benefit is the time saved to get things done is enormous. You're just saving time after time after time. And if you can get people, you only have a team of 5, and now they can do the work of 50. How much more can you get done? What have you not been doing that you can now do because you have more time to get it done? Right. Even if it's to the point that you allow your staff to now have a life so they can work, right? They don't have to work as hard in as many hours because they can get the stuff done faster. Another benefit of learning how to use these tools for your organization so you can be successful. Get more done, be more strategic, build more relationships because you don't have to spend as much time in front of a desk. You can spend more time in front of people. You can work all these different things and you'll be more successful that way. Right? Does this make sense? Okay, very good. So with that, let's wrap it up. Hope you have a wonderful weekend. We'll talk to you soon. Bye bye.